And key South African data released this week suggests an economic contraction in the second quarter as the damage brought by a nationwide lockdown to curb the spread of the coronavirus pandemic becomes clear. Manufacturing production, mining output, and retail sales plunged in the 3 months through June. Joining me now to talk a bit more about this is the Chief Investment Officer at Makwe Fund Managers in South Africa, Makwe Masilela. Thank you very much for joining us, Mr. Masilela.
Thanks, Jimmy, and good day to the listeners and the viewers.
You're welcome. Well, this week saw the release of a couple of data from the Statistics Office, ranging from the manufacturing output, which fell by 16.3% year on year, to the business confidence, which recovered from a 35-year low in July, and the retail sales, which fell 7.5% year on year. And now the central bank sees a 32.6% drop in the second quarter GDP. For you, do you see a deeper recession in the second quarter?
Yes, definitely no, because all those sectors we just spoke about, they account for almost 26% of our economy. So if those sectors already are struggling, then it's a given that our GDP is not going to be looking okay. But even though we've seen some improvement, maybe starting with manufacturing, I mean, markets were expecting around 25%. It fell 16, but it's an improvement from the 2% fall that we've seen before. Same applies to our retail sales. At some point, they fell 11.9%, almost 12%. Then they just fell only 7.5. So the fact here is that things are recovering, and for all common reasons, because we've seen that economy have started to reopen. If you look at the likes of April and May, I mean, especially April, our economy was closed, and that's the case for most economies globally, that they were closed, so things were not operational. But yeah, I think that's a number that one can easily say it's backward looking. The most important thing is going forward. Will we be able to recover? If we recover, to which levels? And how quick will we be able to do that? Because as you are saying, you're talking data that happened in June, in May, stuff like that. Yes, it's a bit concerning. It gives you a sense. I mean, for whatever reason, let's say maybe our GDP happens to contract by more than 10% in the second quarter. I mean, what's important here, is it the second quarter or is it the fourth quarter? I think we'll all agree that it will be the fourth quarter. And what are we doing to make sure that our fourth quarter looks much better? Because those circumstances that happen probably in the second quarter are definitely out of our control. And I think, Jimmy, we have to be honest, we're in a position that it's not only a particular country or a continent, it's a global thing. And we hope that the lawmakers, central bankers, business people will all use this opportunity to make sure that they clean up whatever that needs to be cleaned up, and so that they're well positioned to benefit the minute we start getting to the new normal.
Now, the Reserve Bank has long been under pressure to take more drastic measures to revive the economic growth, with calls for the bank to slash lending rates and finance government through quantitative easing. But then the Reserve Bank governor is not keen about widening the bank's mandate. How would you react to that?
I think we need to be careful here, especially if African countries, we try to be copycats of what the Europeans are doing, the Wall Street, I mean, the US is doing, because the guys are doing quantitative easing. Maybe we just need to understand one thing. The South African rand, just like most African currencies, as compared to your euros, your dollars, these currencies of ours are not held by anyone as part of their foreign reserves. No one is going out there to accumulate rands or the Nigerian lira as part of their reserves, unlike the euro and unlike the US dollar. So now you'll be in a situation that if you want to do quantitative easing, by the way, quantitative easing simply means you, as the Reserve Bank, you go and buy those bonds directly from the government. And we know that for any government to raise money, you issue bonds. But now what is happening is that there is the Treasury issue bonds, then the commercial banks, they buy the bonds, then the Reserve Bank comes and buy those bonds in the secondary market instead of them going directly to the National Treasury. And if they decide to go directly, definitely that will help to lower our borrowing costs. But now the Reserve Bank will be in a situation that probably they'll end up not having the necessary money. Yes, the repo rate will go down, but now thereafter, they have to go back as well and indirectly borrow money again from the very same National Treasury. And you tell me that, does that make sense? I don't think it does. And now, You don't even want to get into a situation where you get a central bank that's looking for a bailout itself from the national treasury. Our interest rates, yes, they're at record lows. The guys managed to do that. And I think that's their way of trying to help the economy. And more importantly, the Reserve Bank has loosened some of the regulations for commercial banks to make it much easier for them to be able to lend out to the ultimate client. So that's something else. And they keep on participating in buying the bonds. I mean, we've seen, the bonds that they're holding now, they're more than 50% what they used to hold. So that's the little bit that they can do, because you also don't want to compromise the independence of your central bank. And it cannot only be monetary policy that helps the situation. You need that to work with the fiscal policy, and the fiscal policy, it means lawmakers must do their part. And also equally important, you need your social policies to be in place, or else then you'll get very few people benefiting from those fiscal and monetary policies. So I think we should learn to move away from having a fixation of the likes of quantitative easing because people are doing it. Maybe we need to start mapping out something, we'll call it whatever we want to call it, as long as it works for our particular situation. Let's move away from being copycats. Yes, we can learn from other people, but does not mean a formula that works for Europe or US or Nigeria will work for South Africa or will work maybe for Ghana.
Right, thank you very much, Makwe Masilela, for your thoughts there and for your contribution on our show. Thank you for your time.